All right, we're back, guys. Hopefully, this is a lot easier for everybody to use and see. I think I figured out what the issue was last time, but again, going live with this week's breakdown. So hopefully, everybody can use these and kind of obviously uh, watch them. I'm not gonna do the introduction this week because I actually am doing this live from my YouTube. So what's going on? So let's do this. Start with dollar index. All right, cool. So now that we got that figured out, let's go ahead and do yours. All right, guys. So what I want to do is basically break down the charts like I usually do. I'm trading the podcast, but I'm gonna do this live on my actual YouTube today because I wanted to save the time of actually editing and making a video. So hopefully everybody kind of uses this and kind of uses as the same way that we do these weekly projections on YouTube. So first things first, um, I'm gonna share this to the chat. Boom. And then we should be good to go. Just give me 1 second, guys. All right, cool. So first things first, I want to take a look at dollar index, right? So again, when we talk about dollar index, there was a couple things that I thought potentially could have had played out in the past week, and really I want to share my other chart for dollar index because it shows a little bit more of what we think was going to happen. So coming into the week, we had inverted this fair value gap right here coming into last week. And so I wanted to see the market eventually respect this to the downside. And this was a very choppy fair value gap here. And so overall, we've been in this downtrend for the past few months, really. And so there's really not a good reason to bet against this. We did have a break in market structure here. So I thought initially we could take things higher, but I said I really wanted to see how the market was going to react to this fair value gap here. So if we jump to the weekly time frame, you can see that we are clearly in a downtrend, and this was just a huge wake to the upside. So that we could see that as really just gaining sell side liquidity or trying to gather sell side liquidity. So ideally, I wanted to see the market continue to run lower. We inverted there, so I thought this is a good sign if we retest and then went lower. But initially, what happened on the this week is that we saw the fair value gap really hold again or be reclaimed. And so there was just a lot of mess that was going on in this zone. But I think we finally ended the week with some level of detail as far as what we are going to do. And I'd like to see the market continue to run down in alignment with that overall trend. We closed below it once again and really respected or inverted this fair value gap. So now this is pretty much an inversion. So ideally, what I want to see here is we talk about going into next week. It's a really big consolidated range. I think we're finally getting some detail here, but I'd like to see the market maybe trade up into this one last time and then continue to go lower. As you guys can see here, that this is pretty much what I've been calling. But with Friday's Jerome Powell announcement, I think we're really starting to see some bearishness with the dollar. So I'd like to see this continue to run down. And I'll really be looking here at my target at 97, 96.91. If I jump over to Euro, pretty much the same thing as here, right? We came back up here, wicked off of this high, and then traded back into this range. Overall, these charts are still very choppy and messy. And this is kind of what I was telling my students is that, October or August trading is it can be very choppy, it can be very hard to read. And your whole goal with August should be really how do I get to September when the volatility is inevitably going to pick back up, right? So, um, for me, August has never really been about hitting huge plays. It's really been about like how do we get the market to get through to September. And so if we jump to the daily time frame, obviously on Euro, we can see again more chop. right? We wicked off and took this high where the buy side was resting, and then traded back into this respective range. This is choppy, right? And so ideally, I want to see the market continue to go higher based on these wicks, based on stuff we're getting, but then also just the fact that we fully engulf this price action here. We're having a hard time really staying contained in this gap. I will feel 10 times more comfortable once we fully get a daily close above this level, and then we can continue to ride higher. But just like I was telling my mentorship group, I want to see very significant closes outside of this range that lets us know that the market really wants to continue to run higher. If we do close to the upside, I'm going to start targeting buy side at this level here at 1.1800 and then 1.1885. So that's my upward targets. Obviously, if we invert this again, which I don't think will happen. I mean, we've been chopping around for a while. And we finally are starting to see strong momentum. So I would like to see this continue to run higher and keep things higher. But if for whatever reason we do start to trade back down again, I want to see very clean, strong rejections or strong closes below and or above this zone here, this fair value gap here. So ideally, gun to my head bias, I'm on lean bullish on euro, but again, I definitely want to see something strong outside of this range before I consider to go long. So the only thing I mean by strong is just a significant close outside of the gate there. Same thing with dollar here. I could see you could almost read this as like a head and shoulders pattern or inverted head and shoulders where you have the low, ran down one more time, then low here. So ideally, I want to see the market start attacking these highs. I'm really going to be looking at this overall swing high here at 1.3594. And taking things to 1.3672. Right, so that's what I want to see. So I'll be looking at this high here or this fair value gap is, to see if we can get an extended run. My first target again is 1.35980, and then the second target of 1.3672. The third level, I don't think we'll hit this week. If we do make a run for buy side, is the all-time high here or the swing high here, I guess. At 1.37881. So those are the three levels that I'm looking at, and I want to see if things go higher or lower. Let's jump to NASDAQ really quickly. I don't think anybody's on live here watching. It's just one person. So you guys can definitely watch these and check these out later. But again, you can't say that I didn't, put these out. So when it comes to NASDAQ, weekly levels here, we've traded into this overall order block here, traded down, mitigated it, and really closed above it. So this is a good sign for bullishness. I want to see the market continue to run higher here. Thing that I want to see though is us invert this fair value gap here. And so if we can get above this gap, that's going to really give me a strong sign that we're going to want to see bullishness. So ideally, I want to see this invert and go higher. We have some trend line liquidity that's building up right there. So these are good levels to attack on the way to the all-time high. So I want to see the market run through this, right? And I'm going to put a note here. In this gap, again, the gap starts at 23,465 and runs to 23,696. But ideally, I want to see the market run through this. So I'm going to say wants to invert. Again, NASDAQ is an investment vehicle, so it's meant to have the market invest in and take things higher over time. So I'd be really surprised, if we start betting against this bearish just yet, even though we, again, had a break in structure here. But the weekly break in structure has not occurred yet. So that's what I want to see on euro. I'm sorry, on NASDAQ. Same thing here with ES. This is actually a little bit better sign because on NASDAQ, that fair value gap right there, had not been fully inverted, but here it has. So this is a good sign that we're gonna potentially run towards these all-time highs. So ideally, I'd love to see something like this play out on ES. Let's look at YM, and then I'll jump to gold really quickly because I know some people look at gold. But YM is actually sitting at its all-time high. So the only thing I could really think here is potentially we take it to the low and then take it to a new high right there. So I'd like to see us get a very, very strong pullback into this fair value gap between Friday or Thursday and Monday's low, wherever that may be. Let's just say the low of the candle ends there. I'd love to see the market trade back into this fair value gap here and then attack that all-time high. All right, so that's the goal here. So yes, those are what I'm looking at right there. If we jump to, I'm actually gonna look at yen and I'm gonna jump to gold because I want to start adding yen back to my watch list. Dollar yen. Obviously, dollar yen is gonna follow dollar first and foremost. We are trading inside this overall bigger swing consolidation that we're building here. So I would love to see the market come back down and retest this level here, and then yeah, obviously trade back in this wedge until we finally get a breakout here. So I'm bearish on dollar. I'm bearish on yen, dollar yen. Want to see something like that play out, at least for this week. And then GC. Gold is a fun one, right? We're trading in this wedge. I don't really have a great read on this just yet. I mean, we did kind of break out a couple times. Now, are we going to reject from this level and keep going lower? Cool. I don't really trade wedge patterns, to be honest with you. I draw them on my charts because I had a hard time seeing consolidation when I first started trading, especially higher time frame consolidation. So I'm not going to buy and sell off of these levels, but I am going to use them as a way to identify consolidation. So ideally, if we are going to be bullish, I want to see the market invert this. And if we start seeing the market respect this level like it has in the past, then we could see the market continue to drop. But I am kind of ready for gold to kind of break out and start really running for its next level of liquidity. Again, ideally, I want to see this potentially attack the all-time high. Nothing's really changed. We know we're in a period of high inflation, a lot of geopolitical stuff going on. And this is usually when gold tends to thrive. So I would not expect this breakout to last much longer. So that's what I'm looking at for all assets. I'm gonna jump back to the comment section. I don't really see anybody on here, so hopefully you guys enjoyed this. And then let me know. We can talk about things next week. So peace again. If you want to subscribe to me, you can follow me at all social media at Brinks Trades, and then Talented 10th. Talented10thtrading.com is my actual community where I post, and so that'll be in the link on my page. You can check all those things out. So hopefully you guys enjoyed this, and yeah, I'll catch you guys in the next call next week. Peace.